Hey guys, how's everything going? Welcome to a new weekly recap. And this one is going to be a little bit different compared to the other ones because, of course, I'm going to share you kind of like my performance for the week, show you my trades and everything. But I'm going to jump into kind of like something I want to start applying on my trading that I'm 100% sure it's going to be beneficial for me. I've been testing it a lot, analyzing kind of like the idea a lot. And I want to kind of share it with you guys, of course, with the reasoning behind it. So, without further ado, let's just jump into my trading journal real quick. Let me make this a little bit short, like smaller. There you go. So this is kind of like my trading journal right now. We're currently 16R in profit for the year. You guys know that this last couple of weeks, especially this month of July, is kind of like it's been kind of rough for me. Not too many good trades or take profits overall. But at least we're starting to climb back in equity, as you guys can see, instead of being so much in down, which I think at the beginning of the week I was down like -6R in for July. Now I'm currently -2R, so that's not bad. We can see if maybe this upcoming days, so the next week, we're able to go a little bit more in profit. But this is how we're doing overall. So you guys know I register everything in my trading journal, like in my journal input. That, by the way, if you guys want to get this trading journal, you can grab it in the link down below of this video. But look at this. So I created this additional sheet where I kind of like entered and inputted all my trades for the week, and these were all my trades. So I took a total of 17 trades. You guys know that I'm aggressive. I'm getting back to my actual trading frequency because I decreased my trading frequency in my previous month because of my a mistake. I made actually an exclusive video about that, explaining my reason and kind of like my mistake. But this is how we did this week. We ended up the week in 3R in profit. Last week was rough. This week was much better. And we had recently one take profit and another one that, if you guys can see, this is 1R, and that's where kind of like the main idea goes into what I want to explain you guys in this video. But before that, I want to kind of open a couple of trades so you guys can see it. I don't want to open, I'm not going to open every single one of them. I actually been documenting every single one of these trades on my Instagram. If you guys don't follow me, just make sure to do it because I consistently upload every single one of my trades live when it happens, where I'm currently on the trade running or when I lose. But let me show you real quick. So let's open this break even in here. Let's open this stop loss. Let's open this take profit. Let's open this stop loss here. Let's open another break even. Let's open the most recent 1, 2, 3, and let's open this one. So starting with this one, this was a break even trade on AUD/USD. This was kind of like the first break even of the overall week. Then we have this one, which was a stop loss. So you guys can see my rules in here. Liquidity sweep, a break of structure. You guys can argue that we were bearish, but I saw this as an opportunity to take a reversal move, considering that the previous high was taken. Of course, this was kind of like the swing high, but still I'm a little more aggressive. I saw it for value gap and I took it. Didn't work out. Then I took this nice take profit on NSET DJPY. Same thing. So you guys can literally see it's the same thing, but in the opposite side. We didn't take kind of like a major big structure or swing low, but in this case I took the same thing, like same rules, liquidity sweep, break of structure, fair value gap, and I entered in this 0.75, targeting a 1, 2, 3, and we had a nice move to the downside. Then there's stop loss that was very close to hitting my 101, but it was stop loss. Then we can see this one. It looks kind of weird in here, but it's because it was a very aggressive move and we had a lot of impulse to the upside in this case. But we reached the trade with this candle here, with this week. Immediately price went to 101 and then immediately stopped us out at break even. So this was a very fast trade that we didn't lose anything at all. Let me actually start closing a couple of them so my computer don't get kind of messy. Then this was a take profit. This one was annoying because despite being a take profit, if you guys have traded GBP in the past, this is, in my opinion and my experience, the pair that has the bigger swaps out there. Instead of making actually 3% in this trade, for example, or 6% on my personal account, because I'm risking 2% per trade on my personal account, I actually literally lost around 0.6%, sorry, 0.5%, so around 1% in total in this trade only. Imagine that. That's fucking crazy, and it's one of the bigger swaps I've seen in my life. But of course, I decided not to close before, because I was already so deep into negative swaps that I just decided to hold it. Of course, I made a decision that if price was closing above this low and then starting to reverse, I would have just closed in partials, because I didn't want to kind of like lose a lot in this trade. But overall, it was a take profit, and at least we made some profit, right? It was not a full 1 to 3 because of the swaps, but it is what it is. And then finally we had this trade. So here's the point, and this is kind of like the main idea of the video. You guys know that I've been trading 1 to 3 risk reward for a while already, and also last month I kind of shared like my analysis and kind of like my reasoning and reflection on why I made a mistake on the last month, because I changed my approach. In this one specifically, I decided not to change my approach, and I'm going to still trade the same exact way, with the same exact rules, with the same aggressiveness level in the markets, but based on data and based on my analysis and based on deep and thoroughly testing. I decided that from now on I'm going to start trading 1 to 1, and I'm going to explain you kind of the reason why I'm doing this. But this was the first trade that I closed in a 1 to 1 risk reward. It's not a 1 to 1 exactly, it's a little bit more, just to cover kind of like commissions. But swaps are not a big deal, especially in 1 to 1, because usually my 1 to 1 it's super fast. I'm going to kind of dive into this a little bit right now. So as you guys can see, this week specifically I took a lot of break-evens, right? And also if we dive into my general input, you guys can see that I usually take a lot of break-evens. But you guys know that I'm someone that loves big sample sizes, and despite of course 254 trades being huge, or it's not a huge but a big sample size where we can actually start jumping into conclusions and start kind of like analyzing a little bit deeper into our performance, I just decided to base my decisions on my backtesting session. So if I open this, you guys can see that in total I've tested 1,666 trades, and that's a big data. I've been testing since 2020, 2021, 2022, until, if I'm not wrong right now, I'm in 2023. So I've tested all these years. I've taken 1,666 trades in total, with a 34.9% win rate, not including break-evens. So these are just wins compared to losses, and this is my total win rate based on my testing, with a total of 389 trades are multiple, or 389 are in return, which is of course around 384% in profit. In my testing, by the way, I don't measure percentage increase based on compounding. You guys can see that I just input fixed $1,000 loss when I'm losing and $3,000 win when I'm winning. So I'm not counting compounding this. This is just for journaling purposes. And of course, I don't have a $100,000 account. So this is just for testing purposes, right? So getting to the point, this is why I decided to do my decision and decided to kind of like start trading 1-on-1 based on my data and a lot of trades and sample size. You guys can see that I currently, based on my testing, I've had 394 wins and 730 and 536 break-evens. So I actually have a calculator here. So 394, so 394 plus 536 trades. 36 trades, that's a total of 930 R in kind of like profit. Why? Because it's a 1 to 3 risk reward. So all the wins here are 1 to 3. So if they reached 1 to 3, they reached the 1-on-1 as well. And then we have break-evens, that the break-evens, they didn't reach a 1 to 3, but they reached a 1-on-1. So these ones are 1 to 1 and these ones are 1 to 1 as well. So in total, I've made 930 R in profit, including just a 1 to 1 risk reward, right? Then in this case we need to subtract 736 R in loss. So 730 trades lost, which each trade it's 1 R that I risk. So 730, that's 736, sorry. So 736, that's 194 R. That's it, right? But then you might ask, yo, Esteban, you currently have 389 R in profit. by using a 1, 2, 3 risk reward. And I 100% understand that, but here's the catch, and here's my decision. In this case, based on my testing, I was risking 1 R per trade, right? It is what it is. I was risking 1 R per trade. But if I just decide and I say, okay, instead of risking 1 R per trade, let me just increase my risk, which is what I'm actually doing with my personal account right now. I'm going to just increase my risk to 2% per trade instead of 1%. Or in my challenges, I'm also risking 2% per trade. So I'm already risking that, right? I just increased to 2%, so 2R. And then look at this, 388 R compared to 389 R. It's the same exact thing by doing 1-to-1 risk reward, and of course risking a little bit more. But there's something that most traders never tell you, and I'm gonna be completely honest with you guys. The main difference is actually 389 R in this case. It's not actually 389, because when I'm holding trades, and a perfect example is in this case GBP, which is the trade I just showed you, which was a take profit. This trade, we kind of like journal this as a take profit, right? And we journal it as a 1-to-3 risk reward. But in reality, we didn't make 1-to-3 risk reward. In this case, I made 1-to-2 risk reward because swaps and commissions were so high and I hold this trade for so long that unfortunately I lost a lot in swaps and commissions, which are variables we can control. But when we trade 1-to-1, as an example in here, look at this. The trade literally took less than a day. It took around 6 hours to get 8 hours to get to this point. So it's not 1 day holding the trade. Most likely, and most of the times, I've realized that 1-to-1, I'm not holding and I'm not getting affected by swaps, and commissions, of course, are lower. So by doing this analysis and doing, okay, I might get 388 R based on my testing by doing 1-to-1 risk reward, risking 2%. This is way more accurate and way more closer to its actual number than looking at this and saying, okay, I'm gonna make 389 R. Actually, I've also made some research, and based on 389 R holding trades until 1-to-3 risk reward, it's very likely that I'm gonna have around 80 R less just by holding to 1-to-3 risk reward. Because based on my testing and based on my trades, I usually get affected by swaps a lot. It's around 0.2% per position on swaps or commissions or other variables I can't control. So overall, of course, the growth might be a little bit smaller. The growth might be not too big, or maybe, for example, in great months where I might get, I don't know, like 3 trades that win 1-to-3 reward, maybe I'm not gonna see that great increase on equity in a short period of time, but it's gonna be something way more manageable, way more comfortable, and it's gonna make, of course, my trading way more simple. I just take the same exact trade. So I go, for example, into, let's say, some pending orders. So this one was a miss, but for example, this is a miss. But if it wasn't a miss, then I just select my trade, set my pending order, price hits here, reach my 101, boom, my TP is there, the trade is closed, that's it. I move on to the next setup. Rather than just waiting, for example, if we can see here, and actually we analyzed based on my testing right now, and based on my live journal right now, so far for the year, we can see this. So let's go back. 46 wins and 92 break-evens. So 46 wins plus 92. It's a total of 138 trades. Right? And if we subtract this with 116, look at this. We will be up 22 R for the year compared to 16 R. So you guys can see that the difference, it's not substantial, and the growth might be a little bit less with 1-to-1, that's for sure. But at the same time, if we're considering that, yo, am I actually 16 R for the month? Not really. And I have my FX book profile, I have my personal account to prove this, where actually based on swaps and commissions, I'm not 16 R. I'm a little bit less, and it's something less actually in turn to and close to the 10 R and for the year, compared to 1-on-1, where I don't get affected too much by swaps and I'm holding the trades way shorter, which at the same time, my margin, for example, my personal account, it's not attached and substrained kind of like for so long. It's just I take the trade, 1-on-1 happens, and then I just move on. So that's kind of like the analysis I decided. That's kind of like my analysis so far. and what I'm gonna start applying from now on. Like I said, my first kind of like trade 101 was this one right here, which is kind of like the most recent trade, USD Chef, which was this one here. I closed in 101, and as you guys can see, is the same rules, the same aggressive setup. We have the most recent price action, we have the fair value gap, and we have the break of structure to the downside. I'm gonna keep trading the same exact way, but I'm actually gonna do something that I didn't do last month where I made a mistake. I'm gonna do some changes, especially in this case in my risk reward approach, but some changes that I've tested before and I have some data to back me up. Not something that I just invented from one day that I'm not having good results. No, I know this is actually good for me. I know that this works, and I know that my win rate is gonna be way higher. If also, I forgot to mention, if I take 34.9% win rate, this is just wins compared to losses. But if I add my break-evens, my win rate's over 60%. Most likely, I'll have to do the calculation and kind of like change this in here, like change the formula. But if I'm not wrong, it's gonna be higher than 60%. So my win rate is gonna be higher. I'm gonna win more trades, which at the end, it's gonna also improve and help my psychology. Because whenever I'm having big losing periods like this one, right, it's much better to just close and have a couple of wins. For example, look at all these wins that came up, which will be 1, 1, 1, 1, 1, right? So that's kind of like my analysis so far. That's what I'm gonna be implementing, and I want you guys to kind of like join me on this process to see how it goes. At the end, this is the main idea. I'm creating content and sharing everything with you guys because I'm documenting my process. I'm not the most profitable trader there, and that's the main idea, keeping everything transparent with you guys, 100% legit, and showing you the data, showing you the reason why I'm doing things and why I'm changing things, and also my mistakes. So in this case, I'm implementing this, I'm starting to do this, and I just want you to kind of like you guys join me in this process and see how it goes. So this weekly recap was a little bit longer, but as always, I want you guys to kind of like understand my process, be involved with it, and join me if you want. So that's basically it for this video, guys. If you guys want to keep seeing this weekly recaps, want to see how I'm gonna be doing with the 101 risk reward instead of 1 to 3, join me. And as always, see you in the next video. Take care.